Many people always perceive that accountancy's profession responsibility are usually related to preparing accounts, financial statement, or only in charge in financial aspect of a company. But this is not the case. In reality, there is a wider job scope where one can be an auditor, tax, or financial consultant. Auditing service has been growing and it plays an important role in creating integrity and trustworthy environment for the entity. This can be shown through a strict implementation of mandatory auditing service in Malaysia. Just imagine if a company's financial statement is not being audited. Surely there will be a lot of negative consequences. Now let's take a look on the consequences.
If the financial statements is not audited, the company's management may not prepare their financial statements in a proper manner. They might not comply with the accounting standards such as the International Accounting Standard and the International Financial Reporting Standard in preparing their financial statements. The accounting standard has certain guidelines and format to ensure the financial statements prepared are standardized and is comparable with other companies in the same industry. If companies prepare their financial statements their own way, stakeholders will be doubtful as whether the financial statements is trustworthy. Next, if a company is not being audited, there is a high possibility of fraud to occur in the company. This is because, with the perception of the company that their financial statements would not be audited, they tend to manipulate their financial statement, such as manipulating the figures in the account or creating fake sales to make it look attractive to attract investors. And this is what we call as earning management or creative accounting. Some company might take advantage of these accounting techniques to avoid or evade tax, like in the case of an American entrepreneur, Walter Anderson, who was arrested in 2005 after the FBI discovered he was involved in the largest tax evasion case in United States history by hiding over $300 million in offshore and secret accounts. So when this happens, the company is not operating with integrity. This is because the companies are held accountable to pay tax. Therefore, if a company's financial statements is not audited, they would use that opportunity to commit fraud such as to avoid or evade tax. Next, when companies are not audited, the effectiveness of the firm's internal control cannot be ensured. For example, the firm may claim that proper controls are placed in the firm. However, without a third party, in this case an auditor, to assess the firm's internal control, there will be no confirmation that the firm conforms to the principle of integrity. Their claims may not have been honest and cannot simply be trusted. Financial statements that are not audited by auditors is less reliable, as there is no independent party that would check the true and fair view of the accounts. Financial statements presented by the entity's management may look fine, but the absence of regulatory oversight of an auditor may decrease the credibility and integrity of the financial statements. The entity may face difficulties obtaining financing from creditors, as the creditors do not trust the financial statements presented by the entity's management. Investors will also tend to avoid investing in entities that do not have a verifiable financial statement.
As in the recent case that has been brought out, whereby, in according to Company Act 1965, all private and public companies need to be audited. However, the latest Company Act 2016 has stated that only public companies need to be audited. Here comes the question: can we trust an unaudited financial statement of a private company? Can we still trust that the company is still operating in an integrity environment? Can the public trust the claim in the company's financial statement? Therefore, it is very important for a company to be audited, because an independent audit builds public confidence toward the integrity of a financial statement and in nurturing the right corporate behavior in the company. Thank you.